For more on this, let's speak now to Jameel Ahmad. He's Chief Analyst at Forex broker GTC. Welcome back to the programme, Jameel. Now, Brent climbed around 25% last month as hostilities resumed between the US and Iran, and we're now seeing a sharp decline in oil prices. Is it purely diplomacy driving oil market sentiment or actual supply changes?
It's diplomacy and it's a sentimental driven financial market. Overall, if you look at what's happening with the swings, these swings and the catalysts we've seen over the past month or so are just based on headlines. And in fact, we can say that's much the same for any asset class in this current environment, not just commodities like oil. We could talk about some other assets in the financial market world too. Essentially, headlines continue to drive sentiment. And what we're seeing here is somewhat of a de-escalation when it comes to the geopolitical tensions. Fingers crossed that continues. That's what's leading the oil prices lower. But it remains very much a wait and see. We've been here before. We shouldn't forget that in July alone, the oil price swung all the way from $70 to $100. We've had more substantial volatility over the past week, including over the past two trading sessions. That volatility is likely to continue up until we have a longer-term resolution, hopefully a peaceful one, towards what's happening in the region.
Right. Meanwhile, the OPEC Plus alliance has agreed to increase production by 188,000 barrels per day from September. Do you think that's enough to offset the disruptions to supply in the past 5 months?
I think the bigger question to ask is whether we truly have all of the answers when it comes to the infrastructure damage that's taken place over the past couple of months, how much that's going to impact supply over the longer term, and how much that the region can produce. Actually, we don't have an answer to that question. So generally speaking, likely there's been an underestimate in terms of what the impact will be on OPEC increasing its supply into the market. At the end of the day, at the same time, because of this volatile and sensitive geopolitical environment leading to very sensitive financial markets, even that news from OPEC over the weekend is likely to be forgotten about in just a couple of hours from now.
And looking at equities, while big tech largely delivered on earnings, sentiment has turned once again. Are investors becoming less willing to look past mounting AI-related spending without clear evidence in earnings growth?
I don't think it's completely fair to say that. We have to remember that the train ride of AI has been the train that all global investors have been jumping aboard on for the past 1 year, 18 months. And that train's never really shown many signs of slowing down. I can't even say now that we are slowing down, just maybe we're taking a little bit of a breather before we refuel for the next stations. At the moment, it doesn't seem that investors have turned bearish at all on AI or whether we're going to head to a correction either. It just may be just a little bit of a short-term breathing space when it comes to this ongoing rally.
Jameel Ahmad, Chief Analyst at GTC, thank you very much as always.